Today we saw over $10 million in unusual options flow come through on AMD. It was confirmed bullish. The way that we know that this was not somebody putting a hedge in is that the order that came through was at the ask or above the ask. You're going to see the flow that actually triggered the alert was this one here. The expiration is 11/1/2024. So that means that this is going to expire within a couple of months. The strike price is $140. So that means that this is $20 in the money. This is very, very safe because they are buying an option that has intrinsic value. In the free options course we have below going over simplification of options, we talk about what actually gives an options contract value because it's a financial instrument. It's not an actual asset. And what gives a contract value is intrinsic value and time value. Intrinsic value happens when the strike price of the stock you have, in this case being $20 in the money, that means that if we held till expiration, we could buy AMD at $140, which means that obviously that price is way lower than the current price right now, which means that we have a ton of value intrinsically in the financial instrument. However, if we went with something that had a $170 or $180 call that's out of the money, the only value in that option is the time, is the fact that we could see a major move in the next couple of months, but that's why I never focus on buying options out of the money. I mainly focus on buying them in the money or right at the money. Now, the reason that this is so unusual is because this is obviously one buyer. The way that we can tell is that they all came in within 1 minute of each other. And this is what Wall Street and institutions like to do. They know that there are people out there like myself who are watching their orders and they try to hide what they're doing. So instead of putting in one $10 million order, they split it up into a rapid buy within 1 minute. And you can see that all of these orders filled. Now, what I'm really looking for and what we explain in our options course down below is these two letters here at the end of the details, AA and A. This means at the ask or above the ask. This is very important because it shows urgency. Anytime you're trading, there is a market happening, like an auction at all points. You have the bid, which is people what they're willing to pay for something. Then you have the ask, which is what people are willing to sell. And what usually happens when you hit the market button is that it will fill somewhere between those levels. But when somebody pays above the ask, which is what AA means, or at the ask, which is what A means, it means that they are paying the worst price that they possibly could just because they want to get into this trade. And the main reason that I don't trade options with my account predominantly is because the amount of money that I will lose just getting into the trade, because I am the liquidity. I have to hit the ask. I have to pay the worst price if I want to build this position out. It's not worth it. So if somebody came in today with $10 million, they might have lost a couple $100,000 just entering the position, which is very unusual. And if we were to actually look at how the history of the price and the history of how the actual holdings have been for this option chain, you're going to notice that obviously nobody's been trading this. There is literally like 14 volume, 2 days ago, 7 volume yesterday. Daily open interest, which is the amount of contracts being held, is 31. And then you have this buyer come in and he buys 5,500 contracts. That is very unusual. So in this case, what I'll normally do is take this information and then look at the charts, look at what's currently happening. Well, we know that at this point, AMD is in an uptrend. The way that we can know is that if we attach all of our lows, you're going to see that we're making higher lows, but price is also making lower highs. This could cause a squeeze to occur within AMD. You can see that price pulled into that institutional buy zone and we ended up bouncing. If we take a resistance level across all of these levels, these lower highs, you're going to see that the next resistance level that AMD could push into is up around 170 or $180. Now, since this expires in November of this year, so just a couple of months, I think this whale is expecting AMD to push another 6 to maybe 10% within the next couple of weeks, max the next month. I think that this person is going to get out of the position once we fill this gap up around 172 to 176, because I doubt that we're going to see this massive breakout back up to all-time highs before a potential rejection. So I'm not looking for AMD to come all the way back up to 213, 220, not at all. Instead, I am just going to be following this position and looking for AMD to hit 170 and $180. If we go over to my positions, you're going to see that I followed with 25 contracts on the same exact position. You can see that I have about $57,000 in these calls, and I entered this position at about 12:15 a.m. Or I'm sorry, 12:15 p.m. So the afternoon, about 45 minutes after this flow came through. And as always, it does not mean that this has to play out, but when I see a great technical setup on top of unusual options activity like this, in my opinion, it's a no-brainer to throw some money at. If you want to learn how I made $1.5 million this year so far using predominantly one indicator, which is the BX Trender, then go check out our Elite Traders Playbook course. It is completely free. It is the course where we go over the BX Trender in depth. We go over exactly all of the settings I have for it, the exact requirements that need to be met in order to take a position, and best of all, I give you guys a PDF checklist of exactly what must occur in order for you to enter a position and exactly where I personally would be setting take profits and stop losses. I hope to see you guys over there.